So we already see the types of correction. We already discussed the rounded correction, corrective correction, the V-shaped correction in the range created supply as well as in the pivot created supply. Same from the opposite side in the range created demand and the pivot created demand. Now we see the application of these models in the chart. You can see that there is a seller's injection comes from exactly this point. Then price creates a range. After this range, price exactly came from this point and it moves in the downward direction. So now we see the range created supply, and you can see that there is a rounded return forms exactly at this point. This is our range created supply. We can also convert into the pivot created supply. So we just zoom out. You can see that we can modify this. There is a sharp move in the upward direction from this point, true expansion in the downward direction. So it's called our pivot created supply, right? So you can see that price just taps into this zone and again it moves in the downward direction. So we can see that there is an impulse move, then it creates a range. We modified it into pivot. Then price moves. There is also this impulse move. This is again an impulse move. This is again an impulse move. Then you can see that price is written back in a rounded form. And now it again is moving in the downward direction. So you can see that there is a rounded wave exactly at this point, right? It's called a rounded return. Here you can see that the model of the range created supply and the rounded return, right? There is a range exactly at this point. There is a seller's injection. Price came back in a rounded wave. You can see that there is a seller's injection, right? And after that, price came back in a rounded return. Then price just taps into this zone and moves again in the downward direction. So let's see another model. So first we see the range created supply model and the corrective return model. So here you can see that this is our range created supply. Price is stuck between this upper and lower point. And if I modified this range created supply into pivot created supply, then this is my sharp move in the upward direction and this is my true momentum in the downward direction. So if I expand this pivot created supply, price just barely taps into this zone and continue going into downward direction. But how the price return to the zone? You can see that this is my major impulse move and this is my second impulse move. After the impulse move, price is returned back to this zone in a corrective wave. You can see that price is returned back in a correction form, and this is our major impulse wave. So this is called the range created supply and the price is returned back to this zone in a corrective wave. And the same model is applied in the chart. You can say this is an impulse move and price is came back in a corrective wave exactly in the zone. So this is the model and the same model is applied in the chart. So now let's see another model. You can see that the major impulsive move is in the downward direction. This is a graph of CAD CHF, right? There is a range created supply forming exactly at this point. So our expectation should be price just steps into this range created supply zone and it again moves into the downward direction. But it depends on how the price is came back at the zone, right? So this is supply for 15 minute and you can see that how the price returned back to this zone. So price is sharp move in the downward direction and again it came back in a V-shaped recovery. You can see that there is no rounded return, no corrective return. Price is going, this is an impulse wave and again it forms an impulse wave. So this is not a trustable move, right? We only trade with if the price is came back after this impulse wave in a corrective form, right? Then we can move in the downward direction. Or you can say price is came back exactly at this point and price creates a rounded return, then we can again take a trade in the downward direction. But this move is not a trustable move. So you can see that this is a V-shaped move and you don't have to trade in this type of move, right? The major trend is also in the downward direction. So you have to be careful while you place a trade exactly at this point. Now we see the pure created supply and the rounded return exactly at the pivot zone. So here you can see that price is moving in the upward direction. It makes higher high and higher low, and suddenly it break the zone, and after this reversal we can find the confirmation, and again the second confirmation it also break the structure exactly at this point. So we find the pivot zone exactly at this point. So we see the pivot point where is the sharp move in the upward direction and true expansion in the downward direction. So last bullish candle, but you can see that there is sharp move in the upward direction, but there is no true expansion exactly in this pivot zone. Price again creates a small pullback. So we just modified this pivot zone to this point. So there is a sharp move in the upward direction and true momentum. Now you can see that price after break this pivot zone, it doesn't come back exactly at this point. Expand this pivot zone for the future trade purpose, and you can see here the rounded return. Price just moves into the downward direction. You can say this is the major impulse move. Again it creates a liquidity. Now the price is written back in a rounded form. You can see here. Now the price again going into downward direction. You can see that this return is in the rounded form. You can see here. So this is called the pivot created supply, and price came back to exactly at this zone in the rounded return form. You can see here the pivot created supply model, right? There is an injection of sellers. Price is returned back to this zone. Price creates the liquidity, right? After this liquidity, price is returned back to this zone in a rounded form. So it's called a rounded return in the pivot created supply. So now you can see that price is moving here in the upward direction, right? The trend is in the upward direction. Now from this point, you can see that after this low, this is price creates a low, then again it creates a high. Then it doesn't create any high and it breaks this low. So this is the point where the trend is changed. And here you can see that there is a sharp move in the upward direction and there is a major true momentum in the downward direction. So we just convert the sharp move into the pivot, and you can see that these are the last two bullish candles, which is creates the pivot created supply. And you can see that after this impulsive move, price is returned to back this zone in a corrective wave. You can see that price is returned back in a corrective wave, and after that price is again going in the impulse wave. So it's called the pivot created supply, and the model is return to back in corrective wave. Here you can see the same model. This is the pivot created supply. Price moving in the downward direction, then price creates a corrective return, right? This is the corrective return, and again it moves in the downward direction. Let's talk about the next model. So here you can see that price is moving in the downward direction. It creates a range, and price is returned back to this range and again going in the downward direction. It again break the structure, again going in the downward direction. Again it break the structure, and again from this point price moving in the downward direction. Again it break the structure. After this low is broken, right? So now this is our lower high. If we draw here the pivot created supply, so now what is the point? The last point is this one. So this is our pivot created supply. The sharp move in the upward direction, true momentum in the downward direction. There is a pivot created supply. Price is initially respect this range created supply, but ultimately from this point it again moving in the upward direction. Why? Because you have to see that there is a V shape return back to this zone. So be careful while you face this type of return. This is called the V shape return. You can see here the exact same model exactly at this point. This is our pivot. Price moving in the downward direction. You can see the heavy injection comes into the market. After that, it creates a liquidity at this point. It creates a liquidity, and now there is an impulsive move. Now you can see that there is an impulsive move. So you don't need to take a trade exactly at this point, because this point may be broken if this move is strong. So don't try to trade into this V-shaped return. Just focus on the rounded return and corrective return. Now we discuss about the range demand and pivot demands. Here you can see that this is the graph of Euro CAD in the 30 minutes time frame. Price is going in the upward direction. It continues respect the demand level. it creates liquidity, and now it break the last previous higher high. You can see that price is break this higher high, and after this higher high, this is the low, right? So we just map out the demand zone and how the price react to the demand zone. So it creates liquidity exactly at this point. So how the price react after break the previous higher high, it just return back to this zone in the rounded form. You can see that there is a rounded return. There is a liquidity, it creates a liquidity, and this is the rounded return. And after taps into this demand zone, price is again moving in the upward direction. So here you can see that there is a two models. This is the range created and this is the pivot created. The only difference between this range and pivot is if there is a range exactly at this point, then it's called the rounded return in a range created demand. And if there is a pivot exactly at this point, then it's called the rounded return exactly in the pivot created demand. So these both are the models, and this is the example of the pivot created demand, and the price is came back in the rounded return, right? So now we discuss about the next model. Trend is continue in the upward direction. It breaks the last previous higher high. So you can see here it breaks the last previous higher high. It creates exactly at this point. You can see here this is the point. Higher high is broken exactly at this point. So it's our 15-minute demand is broken. Now the point of interest is coming exactly at this point, which point price there is a sharp move and true expansion comes. We just find out the range exactly as well as the pivot. So here you can see that if we draw the pivot, then price initially respect the pivot, right? So this is not the point. So next, if we expand this level, again price the steps into this zone. So this zone is also broken exactly at this point. So next point of interest, you can see that there is sharp move in the downward direction and true expansion coming in the upward direction. Now you have to see the correction of the price. After break of this level, now the price is written back in a corrective wave. You can see here price is written back in a corrective wave, and from this point price is also moving in the upward direction. So you have to identify how the price is written back to this zone, how it reacts to this zone, right? So recently we see this model. This is called the pivot created corrective return demand model, right? This is pivot created demand and price is written back in a corrective form. This is the exact same model. This is also the same scene. If there is a range exactly at this point, then this is called the range created demand and the price is written back to this zone and moving in the upward direction. So now we see the last model, that is the V-shape return model. Here you see that the price is moving in the upward direction. It creates every time the demand zone. It creates a new higher high every time and it respects the demand zone, right? Now you can see that price creates a range exactly at this point. Price initially respect this demand zone. Now if I create the next range exactly at this point, price doesn't respect this range or demand exactly at this point. We can see here the only V-shape return exactly at this point. We can't trust on this return. If we find out any rounded return, then we can simply rely on this range created demand and make a trade on the upward direction. It creates a liquidity exactly at this point and this is a V-shape return, right? So be careful only on this V-shape return. You don't need to trade on V-shape return. Just focus on the rounded return and the corrective return. Here we have a two model. This is the range created demand and you can see that price creates a liquidity and it moves in the downward direction. Then this move is not strong. So be careful on this move. Same situation on pivot created demand. Here we have a range. Then again it breaks this zone. Now again that forming price just forms a range and you can see that it breaks the level. So this is a V-shape return. It creates a liquidity. It creates a liquidity and price just going into the downward direction. So trend is in upward direction. Be careful on this situation, right? So these are the models and the application of return to zone, rounded, corrective, and V-shape.